Hello everyone and welcome back for another video. Alright, so quick question. What happens when almost everyone in the market is betting on the same thing? Right now, traders across crypto exchanges are aggressively shorting the market. Majority of positioning is for lower prices, but historically that's often exactly when the market does the opposite. And when it does, the move can be fast and brutal because short positions start getting liquidated one after another. So in this video, we're going to break down what's exactly happening in the market right now, the regulatory news that traders are reacting to, why Changpeng Zhao thinks AI could massively increase crypto payments, and most importantly, the key levels to watch on Ethereum that could decide the next big move. So let's get into it. So let me show you something strange that is happening in the crypto market right now. Traders are aggressively shorting, not just a little. Positioning on crypto exchanges has been building up heavily on the short side. But when the market becomes this one-sided, something interesting usually happens. Because historically, when too many traders are betting on a drop, the market has a tendency to move the other way, sometimes violently. And that's where the idea of a short squeeze comes in. When prices start pushing higher and break through key resistance levels, short positions begin getting liquidated. Traders who are betting on a drop are suddenly forced to buy back the asset to close their positions, and those forced buybacks push the price even higher, triggering more liquidations and creating a chain reaction that could send the market flying in a very short amount of time. So the big question right now is simple. Are we watching the market prepare for another move like that? Because there are two major risks that traders are currently reacting to. The first is growing tension in the Middle East, which is increasing global uncertainty across the financial markets. And the second thing is the delay around the Clarity Act in the United States, legislation that many believe could finally bring clearer rules to the crypto industry. Whenever regulation is uncertain, traders tend to become defensive. And right now, that defensive positioning is showing up in the form of rising short interest. But when positioning becomes crowded on one side of the market, large players often take advantage of it. They push price toward liquidity zones, areas where stop losses and liquidation levels are stacked. And once those levels start triggering, the move can accelerate very quickly. At the same time, there's also important regulatory pressure building in Asia. Authorities in South Korea are increasing scrutiny on crypto exchanges. The country's Financial Intelligence Unit recently issued a preliminary sanction against Bitham, one of the largest exchanges in the region. The proposed penalty could result in a partial suspension of operations for up to 6 months due to violations of AML and KYC regulations. According to the regulator, the platform failed to properly verify user identities and didn't adequately monitor suspicious transactions. Authorities are even considering discipline measures against the exchange's CEO. This is another reminder that regulatory risk remains one of the biggest factors affecting centralized exchanges. But at the same time, stronger oversight is also a part of the long-term maturity of the crypto industry. Now, there's another development that could push crypto adoption into an entirely new direction. Recently, Changpeng Zhao, also known as CZ, made an interesting observation. He suggested that in the future, AI agents might execute millions of times more payments than humans. And those payments, according to him, will likely be done using cryptocurrencies. This comment came shortly after the BNB chain launched its first stablecoin called U, which includes native support for EIP 3009. Without getting too technical, this standard allows payments to be authorized in advance and executed programmatically without the wallet owner needing to sign every transaction. That means automated systems like AI agents, bots, or decentralized applications can execute payments on their own once permission is granted. And this could be extremely important as AI systems become more autonomous. Imagine AI paying for data, computing power, APIs, or digital services, all automatically. In that kind of environment, cryptocurrencies and stablecoins become a natural financial layer because they enable instant, programmable, and borderless transactions. If this model gains adoption, crypto could move far beyond human users and become the backbone of an emerging machine-to-machine economy. But now finally, let's take a closer look at Ethereum because the chart right now is showing a very interesting structure. On the weekly time frame, Ethereum has been consolidating for quite some time inside a monthly fair value gap. This prolonged consolidation is likely to lead to liquidity outflows from the crypto market and the broader uncertainty in the global economy. But when we zoom out further, we can also see a major trend line that has been forming since 2022. Because of that structure, we also need to consider a bearish scenario. If global conditions deteriorate or the market loses momentum, Ethereum could potentially move down toward the $1,500 to $1,700 range. From a structural perspective, that area could act as a major liquidity zone. However, there's also a bullish scenario developing. Locally, the key level for further upside is the weekly fair value gap that we can see on the chart. Within the current corrective structure, this zone could act as a price magnet. If the price moves into that area and we don't see strong selling pressure from aggressive market participants, it could confirm continuation of the broader uptrend. So right now, there are two key zones that I'm watching. First, the $1,500 to $1,700 range. If the price drops into that region, it could become a strong buying opportunity, at least for a local rebound and potentially even for a long-term positioning. And on the upside, the 2,400 to 2,800 zone could act as a major resistance area. If Ethereum moves into that range, it might make sense to take partial profits and possibly even consider short positions, but only if bearish confirmation appears. So right now, the market is sitting in a very interesting position. Short interest is rising, regulation is tightening in places like South Korea with pressure on exchanges such as Bithum, and at the same time, the technology behind crypto keeps evolving. And when positioning becomes this crowded on one side of the market, it often creates conditions for a very unexpected move. Now, I'm curious what you think. Do you believe Ethereum is more likely to drop towards the $1,500 to $1,700 range first, or do you think the market is setting up for a short squeeze higher? Let me know down in the comments below. Don't forget to like the video and consider subscribing for more crypto market breakdowns. Thank you for watching, and I'll see you in the next one.